Howdy, folks. Welcome to the Liberty Call and the weekly wrap up. Today is Friday, woohoo, March 24th, 2023. Hope everybody's had a fantastical week out there. Got a bunch of chores done this week, got a bunch of stuff done around the house, and weather's not too bad. It's going to get cold here again over the weekend. We're going to have highs in the 30s, maybe a little more snow. We got a little overnight. So, anyways, but it's a beautiful day today. And don't worry, it'll warm back up by probably Tuesday or Wednesday of next week. We'll be back in the highs in the 50s. So for you folks down south of me, I know you think that's probably freezing, but I walk around outside like this. I mean, it's, feels good. So, all righty. Well, if it's your first time watching Liberty Call, please give me some big old thumbs up. Like, share, subscribes, all that good stuff, follows. And who wants to jump into the numbers? I do. Let's go ahead and jump in and see how things turned out for today. All right. The Dow Jones finished today off up 0.41%, 132 points. Closed at 32,237. SP 500 was up 0.56, closed at 3970. NASDAQ up 0.31, closed at 11,823. The VIX fell 3.85% today. It's currently at 2174. Canada was up 0.21. Brazil up 0.92. Mexico down 0.11. Looks like a sea of red across over in Western Europe. Germany was down 1.66, UK down 1.26, France down 1.74, Netherlands down 1.58. Was that Spain down 1.98, Italy down 2.23, Switzerland down 0.79, and Portugal down 1.18. Russian exchanges were split again today. MOEX up 0.13, RTSI down 1.18. And the overnights in Asia, mostly red. The Nikkei in Japan was down 0.13, Australia down 0.19, New Zealand down 0.23. In China, the Shanghai down 0.64, the Shenzhen component up 0.25%, China A50 down 0.46, DJ Shanghai down 0.52, Hang Seng down 0.67, Taiwan weighted came in up 0.32%. So, not a terrible day, not a great day, just kind of meh. So I think everyone again is still hoping that the Fed will come out maybe Monday and say, "Hey, we were kidding. We're gonna lower rates. All right, let the market go." But then again, we know what's going to happen. Things. All that fresh cash and the easy lending feels good for the short term. But then in 2 weeks, or probably like 2 years. But in my example of my analogy here, when the morphine runs out and you're like, "Come on, give me another hit," and Chairman Powell's like, "Sorry." Then you're going to be in even worse shape. So, all right, let's go ahead and look at how the week performed. Let's see here. Starting out with the S&P 500 is going to finish the week up 1.2%. The Dow is going to finish the week up 1.11%. NASDAQ is going to finish the week off up 2.25%. Dow Transports like it's going to finish the week down about 0.64, and the Dow Utilities is going to be down for the week about 1.56%. So again, not a terrible week. I mean, I know there's been a lot of gyrations, especially after the Fed decision on Wednesday on the 22nd. But all in all, I mean, still not terrible. Again, let's zoom out to the see how things look on the bigger trend. Again, if you remember last week, I was talking about that it looks like this, breakthrough is probably going to fall back in line with this channel and will continue this downtrend for the foreseeable future. I mean, just looking at the other, the momentum indicators going back into negative territory. The money flow is kind of in between overbought and oversold. So it's tough to tell right now, but I think long term, especially with the economy slowing down, it's probably a good bet that things are going to get a little worse. I know I keep saying this. Things are going to get worse before it gets better, but unfortunately, that's just the way it is. All righty then. Let's go ahead and get into the economic data that came out this week. Initial jobless claims came in at 191,000. Forecast was 197. Last week's number was 192, so we did drop by 1,000 there. Continuing jobless claims came in at 1.694 million. Forecast was 1.684 million, so 10,000 over forecast. Last week's number, 1.68 million. So it went up by about 14,000. Existing home sales came in at 4.58 million. The forecast was 4.19 million. So last month's number was a 4 million flat. So up about 580,000 homes. The month over month grew by 14.5%. The forecast was only a 5% growth. So, and you can see we contracted the month before. New home sales came in at 640,000. Forecast was 650. Last month's number was 633. The month over month number actually grew by 1.1%. Last month's number, it grew by 1.8. So again, not really contracting at this moment, but still not great. Durable goods orders month over month came in at a negative 1%. Forecast was a positive 0.6. Last month's number was a negative 0.5%. So we did improve a little bit from last month's number. The Composite Purchasing Managers Index came in at a 53.3. Forecast was a 47.5. And last month's number was a 50.1. So we did improve on last month's number. All right. So that's all the economic data that we had for the week. Let's go ahead and jump into the market recap. Stock market today, Dow sidesteps fresh bank worries to notch second weekly gain. All right, the Dow Jones Industrial Average climbed on Friday, marking its second weekly gain as bank stocks recovered from an early day slump, and big gains in big tech firms sparked a broader market rebound. The European Central Bank President Christine Lagarde, again another genius out there, pledged support to the European banking system, easing concerns following the sell-off in German bank Deutsche Bank, while Morgan Stanley, State Street Corp, and Citigroup were the biggest decliners. They all ended above their lows for the day as Deutsche Bank cut some losses. Meanwhile, big tech firms pared losses mostly in the green, with Meta Platforms and Microsoft leading to the upside. Activision Blizzard shares jumped more than 5% as its $75 billion sale to Microsoft overcame a major hurdle after the UK competition regulator dropped a key concern about the deal. Again, all righty. Consumer discretionary stocks, particularly travel and leisure, were weighing on the broader market, with Hilton and Marriott International down more than 2%, while Carnival gained less than 1%. However, even as stocks turned green and added to gains, jitters in the market persist as defensive sectors, including consumer staples and utilities, were in the ascendancy. The second weekly gain in the broader market followed a volatile week, during which the Federal Reserve lifted rates by 0.25% and signaled further tightening ahead. However, investors continue to bet on a pause sooner rather than later, as inflation is likely to slow faster than expected. What evidence do we have of that? I mean, it's crazy that people seem to think that, but what are they looking at to come up with that sort of? I mean, you can't see over there. Yeah, which way is the wind blowing? Quote: "We do expect the Fed to go on hold post this week's 25 basis point hike and expect inflation to decline markedly in the next few months, given an easy year-on-year comps, while falling shelter prices should sustain declining inflation in the second half of this year." End quote. Again, you can hope this into existence all you want. I just don't see it happening. All right, next up, U.S. regulators say banking system is sound and resilient. And there's our favorite little, she kind of looks like that owl off of the Tootsie Roll commercials back when in the 70s when I was a kid. So, she's just a dumb human. But, if you have the right political affiliations, you can continue to get jobs and get promoted. All right, the U.S. Financial Stability Oversight Council, that sounds important, declared on Friday that the country's banking system remains sound and resilient. And again, that's in special quotes there. Despite stress on some institutions, the FSOC, which is comprised of regulators such as the Federal Reserve and the FDIC and the Office of Comptroller of Currency, the Securities and Exchange Commission, and other regulatory agencies, convened for a closed-door meeting chaired by Treasury Secretary Janet Yellen, the dumbest human on the planet. The council discussed current conditions in the banking sector and heard a presentation on the market developments from the staff of the Federal Reserve Bank of New York. Despite some institutions coming under stress, the U.S. banking system was deemed sound and resilient by the council. Well, everything's fine. Let's go back to work. The meeting came amid concerns that the banking crisis sparked by the failures of Silicon Valley Bank and Signature Bank could worsen, leading to more runs on smaller banks. In response, the FDIC, Fed, and Treasury announced emergency actions to backstop all deposits in the two failed banks and create new Fed lending facility to boost liquidity for all banks. Wow, I don't remember the legislature voting on this. Do you? No, I don't think they're allowed to do this, but they just do whatever they want. So when this comes crashing down, I'm going to sit here and just laugh and laugh and laugh and, count my gold and just sit here and be like, oh, what happened? I don't know. It's crazy. Those dollars you have in your pocket, those are worthless, people. All right. Two prominent House of Representative Republicans have demanded that Yellen provide them with additional information about the March 12th meeting, including unredacted minutes, votes, detailing on timing, and bank stress test results. The events have transpired over the last 12 days related to both Silicon Valley Bank and Signature Bank. The ensuing market instability and Yellen's role have raised questions for policymakers, according to Representatives Bill Huizenga and Andy Barr. Meanwhile, global banking contagion fears have caused European bank stocks to fall sharply, with Deutsche Bank and UBS knocked by worries that regulators and central banks have not yet contained the worst shock to the sector since the 2008 global financial crisis. However, on Wall Street, shares recovered from an earlier sell-off as three Federal Reserve Bank presidents said in separate remarks that there were no indication of financial stress was worsening this week, allowing them to raise interest rates by 0.25 percentage point. Yellen sought to calm fears of further bank deposit runs on Thursday, saying she was prepared to repeat the actions taken in the SVB and Signature Bank failures to safeguard uninsured bank deposits if failures threaten more deposit runs. Those actions to invoke, quote, systemic risk exceptions, quote, were taken by Yellen, President Joe Biden, the FDIC, and the Fed, which supervised SVB and Signature Bank. More inflation. So, according to this dingbat, everything's fine. So let's go over to another article. This comes from the Mises Wire, written by Ryan McMacken. The Fed backtracks on future rate hikes as bank failures loom large. All right, let's see what he has to say. On Wednesday, the FOMC increased the federal funds rate by 25 basis points to 5%, marking an increase of 4.75% since February of 22. Despite the latest increase, the FOMC has pulled back from its substantial rate hikes seen in 2022 after 475 basis point increases that year, followed by a 50 basis point increase in December of 22, a 25 point increase in February of 2023. CPI inflation remains at or above 6%, although the FOMC has slowed its monetary tightening in the past 2 months. The Fed is under pressure to force interest rates back down to give banks better access to cheap liquidity given the recent bank failures. The Fed may have to choose between reducing inflation and helping bankers. The recent bank failures have put the Fed under pressure to provide a bailout for depositors who exceeded the $250,000 maximum for FDIC deposit insurance. If depositors are fearful of a bank failure, it may cause mass withdrawals, pushing banks toward insolvency and creating deflation. Oh, deflation wouldn't be too bad. The Fed's low interest rate bubble has made banks extremely reliant on business models that assume low interest rates. Banks will increasingly find themselves in a position of having to pay out interest at higher rates than they can collect on older low interest assets. Many banks will continue on the road to failure, necessitating new bailouts via quantitative easing. It is hard to see how the Fed can continue quantitative tightening that Powell has repeatedly claimed he will support, given the fragility of the financial system and potential need for more bailouts. The FOMC's retreat to 25 basis points was expected given this month's bank failures and the nascent financial crisis that has emerged. Recent events are likely to result in the Fed continuing with only token monetary tightening as it looks to prop up the banking sector again. Yeah, I don't have a lot of hope. These village idiots who run the government, run the Fed. I mean, all these people are just basically, scratching the backs of their friends. If one of their buddies, is in a tough situation, boy, there's more than enough money. They'll come running with a wheelbarrow full of our cash and, try to save their buddies. But, if little guy, loses his business because, idiots shut the world down because of a super flu. No one cares about them. They just lose their business, and that's just too bad. You should have, planned ahead. But it just doesn't seem fair, and I'm really, really sick of it. So, all right, well, I'm going to watch a lot of college basketball over the weekend, maybe some more spring training baseball. And by this time next week, I think we'll have MLB opening day. I think the Astros open next Thursday at home. Fortunately, can't make the trip down there. We got other stuff going on up here in Colorado that we have to deal with. So not making the trip this year. Maybe next year I can coordinate my spring meetings and Astros opening day baseball all at the same time, so I can kill two birds with one stone. All right. Well, hope everyone has a fantastical weekend. I will, if you need to reach me for anything, please go to dsafinancialgroup.com. All my contact information is there. Have a fantastical weekend, and I'll talk to you next time. Adios.